Hey everybody, it's Chad Hallett, Captain Mortgage here with the main man at Movement Mortgage, Erik Goodman. He's one of our assistant VPs of underwriting. He is my go-to guru of all things underwriting, all things regulations. Anytime I have an issue or I need to solve a problem, he's the guy I go to because he's like just reading open regs. And sometimes you have to get creative, still color within the lines, but he's the man for that, and he has creative solutions to the toughest problems in this industry. So I just wanted to bring him on board. Erik, thanks for being here, brother.
Thank you.
How long have you? I'm going to go ahead and start off with a list of questions I had for you, and then we're going to open the floor to the realtors that have joined us and let them jump in and ask you whatever they got. All right.
All right.
So first, I want to start off with some basic background. How long have you been in the mortgage business?
I have been in the mortgage business for 9 years.
All right. And what made you decide to make that leap into this?
Before mortgages, I did hotel and restaurant management, and I thought I was going to a 9-to-5 job. So I left there because I was working 90 hours, and well, that didn't work out, but I love what I do. So
Sorry if we call you a sucker.
yeah, seemed like a good idea.
Yeah, it seemed a good idea at the time. That's how it always starts. What do you enjoy most about being an underwriter manager?
Best part of my job is to be able to make loans work and put people into houses. Like I spend the majority of my day just working on stuff and finding solutions in order to get people into their house and try to make your guys' lives and agents' lives as easy as possible.
Yeah, I definitely feel you on that. We went out to a regional director was in town a couple of days ago, and we did a office lunch, and they were ribbing on me a little bit of some of my loans, a little bit challenging, a little bit tougher, but I do a lot of challenging loans. But at the same time, it's we didn't all get into this business just purely for the money. We got into this business to help people. We get into this business to, I like to lift people on my shoulders. I want to put them in homes. I want to help them achieve the American dream. And what you just said is just right on target with that. That's what I like about Movement. Get all the recruiting calls all the time, but that's why I don't stray from them. Let's get into COVID and how things have changed a bit. I know we're not going to go down the rabbit hole of regulations because regs have changed just like almost on a weekly basis last year. And then this year, we're still going through changes. But just kind of give the realtors an idea of how things have changed as far as the work schedule and how your underwriters are operating and what should be expected of them. Are they on track, normal pace, or should we be still giving them some lead time, some grace?
We actually have spent this entire year trying to get into a better position. The market just doing what it did was absolutely insane. And the underwriters were just working an incredible amount of hours every day, 7 days a week, 12-hour days. And the biggest thing that we did is just get ourselves more prepared. And what we've been pushing for is home life versus work life, making sure that they're making up for vacations that they've lost, taking time. There's been times where I actually tell my team that, like, you're not working this weekend. We're in a good place. Our turn times are just absolutely amazing right now at 1.9 hours for upfront. So it's that's our biggest concern, is to try to get everybody's work, family, friends, lives like back together and stop devoting everything to work. My biggest thing is a happy life for all my employees. So it's been a huge push to make sure that we're just getting everything that we can done in an 8-to-5 day and not have to work a weekend or be able to take vacation or feel bad that you're going out of town.
You trying to tell me that you've convinced David Woods to take a weekend off?
I've actually got David Woods down to about 8 hours of overtime.
Wow. For those of you that don't know him, he's one of our underwriters that, like, anytime we need a rush file or anytime we need anything done like over the weekend or late at night, it would get reassigned to him because that dude just works 7 days a week, 12-hour days. He's just insane, getting in trouble for how much overtime. Before we move on, can you, for the realtors that maybe didn't understand the 1.9 upfront, what do you mean by that? What's that mean?
Once you guys, or once a loan officer submits a loan out to us and it goes to an underwriter, ideally with movement, our goal is 6-hour turn times. And last month we did it in 1.9 hours. So from the time that the LO was able to get everything together, put it into the file, get it submitted into underwriting, we would have it done in less than 2 hours.
So that's
business hours.
That's insane. It's insanely impressive. What I want to touch on for the realtors with us, though, is what I always tell people when the people I work with and they're trying to write an offer and like, how many days do I need? I always say I can work as our company works as fast as the appraiser and the client. If the client is going to, not get us what we need in a timely manner, then we're going to sit. But if everything lines up right, the client's doing what they're supposed to be doing. Ideally, you guys should be emailing me the contract. I should be inputting that into the loan file, triggering the application, getting it submitted to Erik's team. And then what he said, you should be getting that automated email from me saying your client's been approved with conditions. So
we had a client just the other day where we finished the loan minus the appraisal. Everything was completely done, and we did it in 2 days.
2 days. It's insane. So I love to hear it. I almost broke my record this this past week, but I know it was a refi, but the bank stumbled on getting us the payoff. But we'll get there. What do I have next for you, brother? I guess if you're looking the point of this call is mostly to answer questions that the realtors might have, but I'm going to dive a little bit into your business. What's your number one advice that you would give to someone that's looking to get into the mortgage side of the business?
Think about what you really want. And I mean, I would never convince anybody to get into the money aspect of it. If you enjoy helping people, you want to be a problem solver, then it's definitely a great job for you to think about doing. And if you're someone who thinks outside of the box and anything like that, then it would be things where if you're a straight line person, may not want to, but there are other positions other than underwriting inside the mortgage business, but it's definitely rewarding. So, I mean, I get to go home every day thinking that we put, I don't know how many people a day into a new home. So
yeah, ridiculous amount of people, and absolutely changing lives. And I know it sounds corny to everybody, but again, they get in the money just for the green. You are just having this trickle down effect for that rest of that person's life. They're building equity. They're building, a future for their family. They have security. I mean, that means a lot. It means a lot to me. When I was working 9:30 at night last night, that's why we put in that.
Well, right. My biggest thing is every morning you wake up and you get to make a decision on what you want to do. And if you want to go into work or if you want to get up at 5 o'clock and make it into the gym or whatever your work or whatever you do. But I absolutely love what I do. So I have no problem getting up, and I love going to the gym as well. So me getting up at 5 o'clock in the morning, being able to make it into the gym and still get into work early it's the best thing in the world because I'm motivated to do both.
Absolutely. Okay, we're going to start diving into the underwriting questions. I'm going to throw you a softball up front, and then we get into some more specific stuff. Up front, I want some advice for the buyer. And this, with the realtors listening, they can pass this on to their buyers. But what is the number one advice you'd give to a buyer prior to knocking out a loan application?
My biggest thing is just to be prepared. Like, we're going to ask for stuff. And granted, most of our borrowers, a lot of them are just regular W-2 employees, and getting all the information that we need is easier. But I mean, there are some, like what you were just talking about with harder loans, that it's going to take some effort, and just be prepared and stay optimistic, because I know with you and a lot of just all the LOs that I work with, that we're all here for them, and the stuff that we're asking for is needed, and it's not to be hard. It's just stuff that is needed.
Oh yeah, absolutely. And I always try to collect as much upfront as possible. I just added a new guy to my team. For those of you watching that don't know, Scott Kearns joined my team in June, and he's helping me a lot with the upfront. So instead of just going from pre-approval to pre-approval, now I have somebody that can dig through and say, hey, I know exactly what the underwriter is going to ask for upfront. Let's just go ahead and knock it out now. And then we can submit cleaner files and less headaches for your buyer, so on and so forth. But they do need to be prepared. It is a process. My next question is about using rental income. So for my buyers that have investment properties that they're currently renting out. So how long do you have to have a tenant in the property to count the rent as income? And the second part of that question is how long just to use it to offset the monthly payment?
So, wow. The biggest thing about this is there's so many different loan types and everything. Like VA, you'd have to be able to prove it for a year. And you can, if you don't have history, then you can use it to offset the mortgage, but you can't use it as positive income. Where conventional, if you're departing your current residence and you just want to turn it into an investment, then you'd be able to start that immediately. There would be other conditions that would be added to it, like a lease agreement and stuff like that. But
yeah, so what you're saying is if I had somebody coming to me right now and their investment property has been rented out for only 4 months, we could count that to offset the income or offset the mortgage payment.
Yep.
Now, what if they live in that property? What if they're refinancing it and they rent out the downstairs, the basement?
And then you're going to run into border income and you're going to run into a whole bunch of challenges. But if you're not filing it on your taxes, then no.
Well, if they've only been doing it for 4 months, they wouldn't have had a chance to file for taxes. So would you be able
Yeah, we wouldn't use it.
You wouldn't use it? Okay.
Nope.
My next question is about USDA, self-employed. I think everybody in the room, especially Suzanne, she's done some USDA with me. USDA is commonly known to take longer, right? I'm not sure about the current interest rate locks, but we used to, like bare minimum, they would only let us lock at 45 days or longer. Now, like he said, movement is super lightning fast, but USDA loans do take a lot more documentation. There's a lot more nitpicking. Every single deposit, I don't care if it's 30 cents, deposited into their account that is not payroll, they have to explain that and prove where it came from, or it has to be excluded, right? Either way, it has to be explained. There's a lot that goes into USDA loans. And then once we get that package together, wrapped it up pretty, then we have to shoot it off to USDA to process. Last year was a nightmare with COVID. Their current turnaround times are pretty darn good, 3 days, last time I checked. So what I've been saying to my realtors, to be more competitive in our offers, I can still do USDA in 30 days. Heck, if the buyer is motivated, let's offer 25 days. However, when it's self-employed and USDA, I feel like that's opening a whole new can of worms. What would your recommendation be for the quickest turnaround time on a USDA self-employed?
USDA self-employed, I mean, we'd still be able to, depending on the borrower, we'd still be able to get it done inside of a 25-day time. The biggest thing would be the appraisal, but then with self-employed, if part of like your last question where what advice would you give to a borrower, meet with a loan officer first, go through what is needed so that they're prepared. So once they do put in the offer on a USDA loan, they're going to have their tax returns done. They're going to know that we're going to ask for deposits and that we're going to thoroughly go through bank statements and everything else. So self-employed as a whole, if they're prepared, wouldn't make a difference between them or a regular W-2 employee. Okay.
It's all about planning and prep, right? I mean, it's kind of like what I said a couple of times, we can only do so much. It's a team effort. Everybody in it has to be in it and be aggressive. Next question for you is, when can we count? Let's say I have a buyer. I'm saying buyer because of the agents here, but we call them borrowers. If I had a buyer who has a side business or whatever, and they're one of the business debts, we'll just say it's a vehicle, is in their name and it's not in the business's name. So when we pull their liabilities, pull their credit report, it's showing up, but we don't want to count that against their debt to income ratio. What scenarios can we not count that?
Your most generic answer, which would cover most loan types, would be 12 months proof that the business is paying for it. Yeah,
that's a good business bank statements showing that that the payments went directly from there.
Yeah, it wouldn't. Yeah, you wouldn't be able to. So if it comes out of their personal account, then we would have to count it no matter what. But if they have a business account or someone else is making the payment, it would be 12 months.
Okay.
Is the generic answer that I would give that for most loan types. Give a whole class on it next week.
All right. Oh yeah, I know, right? Well, my goal is to do this every month, so I'm just gonna start taking better notes month to month and have some good questions for you. But before I move on to the next one, I just thought of another USDA deal. Well, actually, a self-employed one. If we switched, let's say I had a borrower USDA and self-employed, and like I said, we got to document every dime that's deposited, unfortunately, but it's a cash business. His credit score got boosted and we want to make that change to FHA. FHA, would we have, if we could show that's a cash business, would we have to document every single deposit over $300, or where would we be on that?
Once you switch over to FHA, you would follow the FHA guidelines on whatever the deposit threshold is based on that loan amount. But the easiest way around all of that is, even if they're a cash business, is just to have the invoices to back everything up. And then it wouldn't matter on just about anything. So if they started out USDA, we're going to ask for the invoices, and then they boost their credit and they still have them, then that would be the easiest way to get around all of it.
Okay. When I have clients that are looking to buy manufactured double wides, Movement does do double wides. We do manufactured homes, modular, all that good stuff. But there is additional criteria that goes into it. So I want to touch on that for a little bit. I have 2 email templates, one that I send to the buyer or the borrower, and one I send to the agents, kind of give them a little upfront advice on how to structure the contract and things to think about upfront. Is there anything from an underwriting standpoint that we should all know about manufactured versus a stick-built home?
The biggest thing is, from an underwriter standpoint, is that the borrower is going to have to be a little bit more prepared, or a little bit better off. The credit score requirement and stuff like that is a little bit higher. And there's just a few more documents that are going to have to be signed and everything else. And then there's a little bit more to on the appraisal side of it that's going to be needed. But other than that, it's not anything a whole lot more difficult.
Other than the credit score and the engineer cert, that it's on a permanent foundation, I've never really noticed big things, but I just want to pick your brain on that.
No, there's a couple of other disclosures that just need to be signed, but nothing major.
Okay, cool. So all of you guys should feel comfortable knocking those bad boys out. Just a heads up, it is 640 or higher credit score on manufactured currently with Movement. So just something to think about. Erik, I'm sure it'd just be your opinion, but sometimes the demographic for manufactured, somebody downsizing, but a lot of times people getting into a manufactured home is for the price point. And in correlation, their credit scores aren't always necessarily at that 640 mark. Is there a reason why we require a higher credit score for manufactured? Is it considered more risky, just like a second home would be? Or
I would say that it is more of a risky loan, because honestly, from a personal aspect or personal opinion of it, a stick-built home is going to hold value longer than a manufactured home. So that if anything were to happen, there's a greater chance of losing money. But I think that's just my personal opinion. I've never really dug too much into it. But just like anything, it probably comes down to more of the value of everything, where a manufactured home may lose value faster than a stick built home.
Sure. Okay. And I always advise, at least on the buyer side, I advise my agents when I'm getting what's called a refer eligible when we're running the client through automated underwriting. So what that means is they're eligible, but we're getting a referral. So we're going to operate it as a manual underwrite, which means there's going to be additional hoops to jump through. There's going to be additional standards. Maybe if they got just a straight approval up front, they wouldn't need reserves, but now they're going to need reserves. They're going to need to meet other compensating factors. Should agents fear the dreaded manual underwrite, or do you think those are still good loans? You know?
I still believe it's a good loan. I mean, it might be something as goofy as what causes a manual is they miss something by mistake, and an honest mistake that's just causing their credit score to drop, and for our system to pick up, whether it be Fannie Mae or just pick up that one late that they had, and it just switches it over to a referral. I still think it's a good loan. I mean, there is going to be a reserve requirement. There is going to be some additional conditions and everything, but I wouldn't be scared to do that loan, especially on a well-prepared borrower.
Sure. I know we've done one recently together that I want to say it was USDA, but anything, just FYI guys, anything under 660 for USDA since 2021 is going to be a manual. It's just, they're not giving approved eligibles out to anybody under 660, at least from what I've been seeing. But one of the compensating factors we used, underwriter only asked for one, was 12 months of on-time rent payments. So boom, how easy was that? So yeah, technically it's a manual underwrite. And people look down on that, like it's gonna be a more challenging time, but it doesn't have to be. It's all about getting your ducks in a row up front. And that's good communication between the loan officer and the realtor. And when I'm getting those, I'll be honest, I've been sending a lot of them for MBA. Can you explain to the realtors here what the MBA program is for the movement?
So on a more difficult loan, it can be run through myself and also my manager, and we can prove it to be a fully conditioned pre-qualified loan in order to work out any of the bugs, and then they would be able to decide like, hey, we actually can do this. The stuff that they're asking for is realistic, and we would be able to move forward. Where if we review it and they're like, and you guys get to go back to your borrower and be like, hey, they're going to ask you for 12 months of verification of rent. Are you good with that? And they come back and say, well, I made my rent payment 6 months. And we know that we're not going to be able to do the loan. So at least then they're not putting in a contract and us denying the loan.
Yeah, they're not necessarily a guarantee, but I think it adds a lot of power to you as the realtor. I'm going to give you a different pre-approval letter. It looks almost the same, but if the listing agent takes the time to read the verbiage, it'll say right in there that this has been reviewed by a real life human underwriter. It's been fully conditioned. And then there's that warm and fuzzy. A real underwriter is looked at, not just a loan officer, not just inputting it through automated underwriting, human error. You've got a second set of eyes, an expert that's already grilled it. And I think that adds, especially in this market when it's very competitive, I think that adds a lot of value. And I'm glad it does it.
I mean, I've seen through personal friends as well that when we do that, it also gives the opportunity for them to start working on everything. So when they go in to put in an offer on, and it'd probably be more of a difficult loan if I okayed it to be a pre-submitted loan, that they already can be working on all their documents. So we actually can close extremely fast. It'd be a loan that, hey, you've had this for a week, you've been pre-qualified, start working on it, because once you get a contract, this is the stuff that we're going to ask for. And let's be ready to close as soon as the appraisal is done.
Yeah, absolutely. I got a VA one right now. Same scenario. MBA approved up front. We knocked out all the conditions up front, and we plan on closing it in 20 days. And that's with the appraisal. So definitely.
Unfortunately, now we're just a whole lot faster than the appraisers are. So
yeah,
it used to be you had to wait on us. But
out there. That's all I got for my questions. I'm going to open it up to the realtors here. I don't see anything in the chat. you guys got to give me something, or you all owe me drinks. So, Anita, you think of anything yet? Miss Suzanne? Suzanne teaches at Coldwell Banker Elite, so she trains a lot of their new agents and stuff. So,
Okay.
I know she's got something for me.
I do. I do.
Oh.
And I apologize for not being on camera, but I have had a Zoom meeting every day this week, and I decided this was a no makeup day, so I am not scaring anybody. So it's an odd question, but if I remember correctly, like back before '05, sometimes the buyer could sign, a mail away. And then we went into a whole, phase where no, buyer actually had to be physically, there signing wet signatures. And then we hit COVID and we started having, some remote closing. So, I don't know whether this is an Erik question or a Chad question, but where does Movement Mortgage stand on that? Does it depend on the type of loan? Does it depend on the closing company? So
it all comes down through all my friends that are loan officers and LOAs. I've had so many where they're like, hey, we need to get this loan through. They're going to drive out to the closing. We want to make sure that we have everything perfect. So we've definitely done both. And we actually have a title company. It's not a direct affiliate of ours, but in the office, we have a title company. I have talked to them, and they do a real lot of just driving out and doing remote closings. So.
And what if it's out of state?
Different states have different things. That would actually come down to the title company more than and state, because I know some states allow dry closing, some Virginia does not. And from an underwriting standpoint, it would be more of a closing / title company question. My biggest part of my job is to be able to get the loan into closing. So be able to handle this question and give you an exact answer, I wouldn't want to try it, I'm guessing.
Okay.
Like Erik said, it depends on the state, Suzanne. So Virginia doesn't let us do it 100% dry, meaning electronically. So we do, in most cases, we'll do 90% of it online. We'll send them, if the buyer opts in, they have to say, yes, I'm willing to do it electronically. They'll do 90% of it up front online. And then when they get to the closing table, it should only have this much paperwork. Doesn't always work that way. Title companies seem to have them redo the whole dang thing a lot of the times. I did have Virginia buyers living in Alabama, and the title company just simply had an affiliate, a notary, go out there and go to them and do the signing in person in Alabama. So that's how we handled it in that situation.
Gotcha.
I don't know. I think it's unique to every state, like you said. But,
Okay. Thank you.
How about you, Darian? I know you did your makeup today. He's going to be shy now. He's on government time. Anita, you got anything for me? Miss Jada?
I do have a question as far as for entrepreneurs. First of all, I just want to say hi and thanks for actually doing this. Sorry I'm not on camera. I've been dealing with my son. His birthday's tomorrow. So
that's okay. Look at me and Erik.
Yeah. Well, I wanted to inquire about self-entrepreneurs a little bit more.
Okay.
I had a client who recently just tried to do a refinance, and he had a side business, but it wasn't really making any profit or making a loss. It was, something he probably started 2 years, and the profit and loss statement is where we got held up at. I just wanted to see if you could just give me a little bit of insight about that and kind of how that would change, a decision in regards to this.
I could we could sit for about 8 hours. I could talk about self-employed, and the next day you would wake up and think of 100 more questions, to be honest with you. So as far as the generic answer that I can give when we do this, based on the loan type, conventional, Some allow us to use 1 year tax returns, and some require 2 years. FHA is going to be 2 years. We're going to go off of the tax returns. We're going to do an average of what it says. So if it says 1 year, we're going to do a 12-month average. If it says 2 years, then we're going to do the 24-month average. As far as your P&L goes, if they submit a P&L, so we're in August now. They submit a P&L from January to the end of July. We're going to evaluate it. We're going to base it on the bank statements to make sure that the most recent 3-month bank statements to back up that P&L, to make sure that they're online. And I have seen where P&Ls have come back where they're, I would advise the borrower to reach out for help if they don't really know what a profit and loss statement is, to make sure that they're reaching out and having it explained. It can definitely make or break a loan, because if you submit a profit and loss statement that comes back to underwriting and they're on pace for a loss, then it's definitely going to be a problem. And a lot of times from borrowers where I've seen this problem was they just didn't know how to do a P&L. So they quickly Google it and they come up with something that says, all right, this is what I need. These are my expenses. This is my income. And they do it all out really quickly. And then they start adding stuff in like they're doing their taxes or something. And it causes a lot of problems. So a profit and loss statement can have a benefit and a loss. We would never take the income off of a P&L because it's not a audited, fully documentable income. It's based on what they're writing up. So it does, it would definitely, it can have a negative impact, to answer your question really quickly.
Well, I appreciate it. Thank you.
But my biggest thing is to make sure that reach out to the borrower and just say, hey, we're going to ask you for profit and loss statement. Do you know what it is? And I have given out generic ones to our loan officers, so they have a template to maybe be able to help guide a future borrower on being able to fill one out.
I appreciate it. Thank you.
You have any other questions?
No problem.
No,
I do.
Suzanne, you got one?
And you're right. I teach new agents, so I always try to prep them. Definitely with self-employed, if I'm taking a client out or, my first initial conversations with them, I encourage them to reach out to you guys to make sure that they have all the documentation that they're going to need. But my question is, other times I have buyers going, oh, my dad's going to give me money or my grandma's going to give me money. So gifted money, I guess, does it depend on the type of loan of what you guys are going to need from the gifting person? I've had it like you guys have needed, or lenders have needed tax statements and stuff from the person giving the money. So could you guys touch on that a little bit about, what's required, or it may depend on the type of loan?
It's definitely dependent on the type of loan. So conventional loans, we're going to require a gift letter and proof of where the funds came from. FHA loan, we're going to ask for a gift letter, proof of where the funds came from, 30-day bank statements, and we're going to evaluate those bank statements like we would evaluate bank statements for our borrower. VA loan, honestly, Scooby-Doo could give a gift in VA land. We're going to ask for a gift letter and then proof that they have it. So it's definitely loan dependent, or based on all that. As far as needing tax returns or something like that, then something definitely must have came up very interesting on the gift person's bank statements. The other part of that, like conventional loans, can only come from a gift. FHA can come from a family member or a close friend that you'd have to be able to explain. And like I said, VA, I could go to the corner and ask people for gifts as long as they sign the gift letter.
Yeah, we had wasn't there like a 2-month window where FHA was letting us do a 1-day transaction history instead of the full 30-day statement?
I think it was actually longer than that. We were doing that, and then I think FHA
told me until it was over.
Well, that was interesting about the VA that you said Scooby-Doo could do it. And you know, I've had some buyers or the gifter get a little up in arms, you know, like, why does grandma have to provide her, you know, private information? And I always joke around. I was like, they just need to make sure that, you know, grandma earned that money legally, that she's not selling drugs in Compton or something. But, you know, really, I think it's just to make sure that they've paid taxes on that money and, you know, where it's coming from, I guess. Is that correct?
In my honest opinion, as far as like FHA goes, they want to make sure that there's nothing out of the ordinary. Like, say I'm buying a house and I have $5,000 in my safe, and I can't use that money because I don't have $5,000 in cash documented. So I turn around and I give it to my mom, and now she has a $5,000 deposit 3 days before she wrote me a check for $5,000.
Right.
It's just a change for us. And probably the biggest part of any of the, on any of them, is the whole interested party stuff, making sure that it didn't come from anybody that is interested in the transaction.
Yeah. Years.
I
Go ahead.
Sorry, no, go ahead.
No,
I think
you
my
go
phone is lagging. That's why. I have one last question. As far as just because I'm a fairly new agent, and of course I'm going through that part where, you know, clients think that they're ready or, you know, not really sure. Then we get them through the mortgage process, or at least attempting to get them to do the application in, or they might do the application. And then, of course, they start needing all of these different documentation. So could you kind of, I know everything is, you know, pretty much case by case, you know, you never know exactly what you can do, but how can we better prepare them on the front end so that I'm not wasting, you know, your lender's time or underwriting time when I'm dealing with the
I
client,
want to jump in on
if that
this
makes
too.
sense.
You can go first, Eric. I want to jump in.
All right. So it's not really an underwriting point of view that I'm going to give you, but I'm really good friends with a loan officer and a production manager. So the biggest thing is, as far as money for cash to close, is you'll have a generic idea of how much they're going to need. You'll be able to come up with an estimate. And from the beginning, I would just make sure that they know, like, it's FHA loan. You're doing 3.5% down. You didn't get any seller concessions. So chances are these are going to be your closing costs. These are going to be what we're going to hold in escrow and all of this. Just having them prepared so you don't get down to it. And I've had bars a lot of times from an underwriting side of it, where we get down to where we're starting to do our final numbers and we realize that they just don't have the funds to close. So just from the beginning, just being honest, like, you're buying a $300,000 house, you have 3.5% down. This is what you're going to have to bring, plus your closing costs and whatever that may be. Chad might be able to get more advice on it than me. From an underwriting standpoint, we wouldn't have all that much. We're just going to document that they do have it.
No, you started off right where I wanted to end up about the money side of it. I know Suzanne and Darian have experienced my pre-approval emails. I'm very specific, and if you haven't had one from me in a while, I get very, very specific now on the conditions of that pre-approval. And what we need in return from the realtor side is either to help the client meet those, or talk to me, communicate with me for a solution up front. If I put in that email that they're pre-approved for $300K, but they're going to need a $3,000 seller subsidy, I'm not putting it in there for fun. I'm not putting it in there because I want to protect their nest egg. I'm putting it in there because they don't have all the money they need to close. They have to have that 3K, or we have to get creative and find a way for them to come up with that 3K, whether it's a gift or some other form. So that's very important that the communication is good on that. What I wanted to jump into, Jada, is I have this series on YouTube for my Captain Mortgage channel. It's called What Grinds My Gears. It's an old Family Guy skit thing, but the one I wanted to do is the zero money home purchase, right? And there's this one real estate group that advertises a lot on Monday Marketing or Marketing Monday, whatever they call it, on the Facebook groups. 0 down, right? $0 home purchase. Well, that's not a real thing. We guys know that. I don't want my realtor partners to screen people so toughly that they never make it to me. I mean, I don't want you guys doing my job, because you may turn away people that we can help. But it is good to have an idea and maybe tactfully tell them that you are going to have to reach into your pocket. Even if your VA, USDA with 0 down payment, let's pretend they get the max seller credit they can get to cover all their closing costs. Well, guess what? They're not getting that seller credit up front. They're still going to have to reach in their pocket and pay for that appraisal, right? I don't know any of you that would recommend waiving the home inspection. At least do it just for knowledge, right? Maybe not make it contingent at this point because of the market, but a home inspection costs money. It costs money to turn on your water. If you live in the city, it turn on your electric. Let's not forget their people too. They're going to have to buy curtains, refill the refrigerator, do all that stuff. I get so many because of direct marketing. It's not just agents, it's mortgage people too. Direct marketing make it seem like you can get into a house for $0. And then I get application after application of somebody with negative $20 in their account. That's not a realistic thing. And I think we're setting those folks up for either A, hardship if we somehow make it work, and B, set them up for disappointment. So that's something I guess I just wanted to touch on a bit. But.
Yeah, that's one of the first conversations I have with my buyers is that, even though you think you're getting 100% financing, that there's some money that has to come out of pocket. Those home inspectors expect to be paid at the time of service. Mm-hmm. The appraiser has to be paid, at the time of service. Radon, septic. So I always tell them, you need to have a couple $1,000, plus the EMD. So, some people are like, yeah, I get it. And then other people are a little surprised. Like, no, I got $500 in my account. I'm like, ugh, okay, well, let's talk to the loan officer, but, we may be 3 months or 6 months down the line while you save some money, for that up front. And I always say, yeah, I like good food. I want to be able to eat. I like having power in my house. So, figure that out. I think back in 2005, people didn't take that in consideration. They were buying these mammoth houses and then realizing it was costing $5,000 a month to maintain the pool and the electric and gas, and they didn't have it. So, yeah, first conversation I have with them.
It's about affordability.
Thank you.
What's that, Jada?
I was just saying thank you for everybody's responses.
Oh, you're very welcome. Does anybody else have anything before we all get back to the craziness before the weekend starts? I know
one last question. Leave it to me. So VA loans and VA required repairs, that used to be crazy. If there was a little bit of peely paint on the rim of the garage, wasn't even structural, it seemed like that was getting flagged. Then they loosened up. And I realize, it's sad right now that our VA buyers sometimes are getting beat out. They're feeling like they need to switch over to conventional loans, which is not right. But, maybe we're not seeing as much VA loans right now. But what are you guys seeing as far as, what VA lender required repairs are needed?
I'm always pushing VA, obviously, as a vet. I take that personally.
I know you are.
I think it's BS when VA offers get turned down just because of war stories back in Nam, appraisals were bad and blah, blah, blah.
Amen.
But Erik, you've helped me crush a lot of VA loans. Can you give her like a 1-minute pitch or 30-second pitch on if she was selling a VA loan to a listing agent, what would you say?
Honestly, a VA loan is my dream loan. So in all the years of underwriting, my ongoing joke is the easiest loan for me to underwrite is a VA active duty loan. As far as appraisals and everything and all the years that I've been doing, I've definitely noticed that they've come down a lot. Yes, some of the requirements are still higher. You're still going to have conditions of lap and you're going to have to get through all that. But as far as choosing a conventional loan over a VA loan, that's crazy to me because I can make a VA loan work a lot easier than I can any conventional loan. The restrictions on them isn't as hard. Getting AUS approval is not as hard on a VA loan compared to a conventional loan. The amount of money it takes to close a VA loan compared to a conventional loan is usually a lot easier. So it's crazy to me to actually hear that someone would step down from taking a VA loan over a conventional loan. And as far as how long it takes to get a VA appraisal versus a conventional appraisal, that I can't really answer with that. Closing a loan, you give me a VA active duty loan and I will finish it. I could do it in no time. I think they're just a whole lot easier of a loan for approval and everything else. I mean, you can even do manual underwrites on a VA loan where we're not going to do them on a conventional loan. So even if something starts to go wrong during the loan process, we'd still be able to fix it.
That's awesome.
So it's crazy when I do hear that. And I have a bunch of friends that are realtors and they tell me, and they're like, I don't know what to do. And I'm like, I don't understand it, because a VA loan is an easier loan. Yet there's more documents required, but there's less. VA is so generic on what they ask for. That is all they want is their biggest. And if you talk to anybody in VA, I talk to people in the Roanoke office all the time, is that we're taking care of the veteran. That's their biggest thing. We're not putting them into a worse situation.
Yep. Yep. And they have guaranteed employment. They're not going to lose their job tomorrow.
Yep. It's just hearing, and this is the first conversation I've ever actually had about this. We've talked about it over drinks before. We've talked about it with my realtor friends, like I said, and it's mind blowing to me that someone would tell a seller like, hey, this one's a VA, this one's a conventional, let's go with the conventional one. If they're identical loans and it was me that had to choose on which buyer I'm going to choose to purchase my house, I'm going to choose a VA loan anyway, just for the veteran aspect of it. But knowing what I know, I would choose a VA loan as well.
Yeah. Yeah, me too. My husband's a retired Marine. My daughter's in the Air National Guard. My son's 4 cadets down at Virginia Tech. Many friends, and it's an awesome program. It's helping our active duty and veterans. And, I think sometimes what I tell new agents is sometimes you have to educate the listing agent on the other side. Yep. They just may not know. So, I do my best to fight for my veterans, and sometimes it's educating the other side.
It is. And it's a shame that as far as appraisals go, I've definitely seen them back down a lot. I mean, if you're missing a railing on your steps, and I think it's 3 steps or more, yes, they're going to come and hit for it. But I mean, if you're missing a railing to sell the house, it's something that the selling agent should look at when they do their initial sold houses before. And I knew, well, being in mortgage, I knew what was going to be required. But yeah, I would tell anybody and any agent that if they were to back down from a VA loan over a conventional, if they're mirroring each other, then they're crazy.
Yeah, 100%, man.
Yeah, thank you. This has been awesome, guys. Thank you so much.
You're very welcome.
No problem.
Thank you guys all for coming. If each one of you, Jada, I don't think I have your email address, but Suzanne and Anita, if you guys are interested, I do have an appraisal conditions cheat sheet for each loan type that I send out to my realtor partners that are, do a lot of listings and stuff. They want to make sure their stuff's squared away. I'll be happy to email you.
That's awesome.
Yeah. Let me know if you want one, and I'll hook you up. But
yes.
Okay. We're gonna go ahead and wrap this up. Poor Erik here has been walking around the yard for 45 minutes. I really appreciate you.
Dog's probably inside going nuts.
You would have stayed in front of the laptop.
I didn't realize. I went out. Actually, it's funny that I'm sitting here talking to realtors, because I went out to go look at some land, and I'm thinking about building a house. So
now you're gonna get a bunch of calls.
I just built one on the south side. So yeah, I'm into that too. And I left my email. I left my email in the chat, because I would like that information also.
Yeah, sure, no problem. We're gonna, like I said, I'm gonna try to do this every single month. Was it the 2nd or 3rd Friday of the month, whatever it is. So it's gonna be consistent. So if you guys have questions, hit me up anytime, 7 days a week. I'll try to answer them. And I do it Army style. So like when you go through to a promotion board or something, you'd tell the sergeant major, this is the answer, here's the regulation, or you'd be like, sorry, I do not know the answer, but I know where to find it. And you tell them where to find it. So I do the same thing. So I'll tell my agents, hey, I'm pretty sure it's this, but let me verify for you. And then I'm going to get off the phone with you, then pick up the phone, call Eric, and then I'm going to call you back and try to make myself sound like a genius. But we're going to do this every month. If you guys have questions, let me know. I'll add them to the list, and I can get you immediate responses. I'm still going to leave them on the list just to do this video for everybody. But yeah, thank you everybody for showing up.
Thank you for having me.
Yeah.
Thank you.
Talk to you guys.
You guys all have a great afternoon.